everyone, we are from Group 8. We will be presenting assignment from the documentary called Enron, the smartest guy in the room. Before we start, let us introduce ourselves. My name is Pauline Nathania, and my friend Aqni Rizqiani, Mischa Debby Florensia Sinaga, Mardhiyyahfarhah kahaizaeta. All right, we'll start from the summary first. I will tell you about the documentary called Enron, the smartest guy in the room. The smartest guys in the room, this is called, reveals the shocking story behind Enron's rise and collapse, one of the biggest corporate scandals in history. It shows how top executives like Jeffrey Skilling, Kenneth Lay, and Andrew Fastow manipulated financial statements using mark-to-market accounting and off-balance sheet entities to hide losses and inflate profits. Driven by greed and arrogance, Enron created a toxic culture that rewarded deception, silence, ethics, concerns. When the truth surfaced, thousands of employees lost their jobs and savings, while their company's reputation and investors' trust were destroyed. The film highlights how corruption, lack of ethics, and weak oversight can bring even powerful corporations to ruin. So we'll start to the next slide. This slide will be presented by Mardhiyyahfarhah.
Okay. First, top executive related financial reports to inflate profits and hide debt. Second, they created a culture of fear and intimidation, suppressing internal warnings and ethical concerns. Third, the board of directors failed to provide adequate oversight, allowing unchecked power and conflicts of interest.
Thank you, Mardhiyyahfarhah, for presenting. We'll go to the next slide. This slide will be presented by Aqni Rizqiani.
Okay, the next one is things that accounting can do to prevent fraud. First, auditors should have remained independent and challenged management assertions. External auditors should have stayed objective and questioned the company's suspicious financial practices. Instead, Enron's auditors become too close to management, losing their independence and professional skepticism. Second, proper security of related party transaction and of balance sheet entities could have revealed the fraud. Careful examination of Enron's complex financial structures and partnership could have exposed the hidden debts and false profit reports earlier. And the last one is accountant needed to uphold professional ethics and report irregularities even at personal risk. Accountants should have prioritized honesty and public responsibility over the loyalty to the company. Reporting unethical behavior, even when risky, is part of maintaining trust in the accounting profession. I think that's all. Thank you.
All right, thank you, Aqni Rizqiani, for presenting this slide. We'll go to the next slide. This slide will be presented by Ms. Debby Florensia Sinaga.
Okay, from the documentary, we learned that corporate fraud often results of a lack of integrity, transparency, and accountability. Enron's downfall was caused by leaders who manipulate financial statements, ignore ethical standards, and silence whistleblowers. Accountants play a crucial role by either enabling or failing to prevent these serious abuses. The lesson is clear: ethical behaviors, professional skepticism, and strong oversight are absolutely essential to protect investors, employees, and stakeholders, and to maintain long-term trust in the business. Without these important values and responsible leadership, even the most successful companies can eventually easily collapse, partly due to deception, corruption, and also uncontrolled greed.
All right, thank you, Ms. Debby Florensia Sinaga, for presenting this slide. And we think that's all from us. Thank you guys for listening, and goodbye.